Okay, Louis.
Hi, this is Louis Fine, and today we're going to speak about IR and PR in the investment community. And we have with us today Patricia Baranowski-Schneider, who is the President and CEO of Pristine Advisors, and she handles IR, PR, marketing, and media relations for companies and funds, and she's done so for close to 30 years, 29 years to be exact, and the firm is an award-winning one. In fact, Pristine just won, as of yesterday, yet another award, the 2016 Global Fund Award for Excellence in Investor Media Relations. So I want to offer my congratulations to Patricia and welcome her to the webinar.
Well, thank you very much, Louis, and we're happy to be here today to talk about the importance of marketing and IR and PR for companies of all shapes and sizes.
Yes, you know, we feel that that's an important topic, and we're delighted to hear you talk about your experience in this field and the importance of this for companies and funds. So I guess I'll start off by asking you, in your opinion, are IR and PR the same?
I guess from my aspect, I'm going to say probably a big fat no. And the reason being is we feel investor relations is how a company communicates with their investors, shareholders, government authorities, and the financial community as a whole. And PR, on the other hand, is marketing to the world. And PR and marketing and media relations all play a different role, from events, advertising, etc. I mean, they all play a part. They just are a little bit different. So I guess you could go to the next slide, Teresa. So I guess in our aspect, we could just say the primary goals of investor relations. It's ensuring that the financial markets accurately value the company's assets, expectations, and future earnings and cash flow. They maintain favorable access to capital markets. They maintain market liquidity under all conditions. They inform the management and the board of directors about developments in the financial markets and perceptions of investors. They enhance management's understanding of peers' performance, strengths, and strategies. They maintain open communications and credibility with investors, employees, customers, suppliers, and communities in which the company operates. Ensure consistency of communications with related constituents and the trade, financial, and general media. Next slide, Teresa. So I guess key elements of an investor relations plan, tactic-driven. They analyst contact and analyst meetings, budget, crisis communication plan, fact sheets and fact books, investor contact ongoing, and we'll touch on that a little bit later, investor relations kit, media list, photo archives, press releases if they're relationship with specialty firm and market makers, relationships with outside vendors and consultants, and the website. I mean, that's basically what your IR plan should entail. Key elements of an IR plan, strategy-driven. And again, you're going to change your IR plan depending upon the goal that you're looking for. So for strategy-driven, it would include an analyst day, benchmarking, broker contact, competitive and industry analysis, corporate governance, disclosure policies, employee communications, individual investor programs, industry investor conference, market intelligence, sell-side outreach, and targeting.
So basically, there are multiple IR audiences, and the activities target a multitude of things.
Right. Correct. It's different from IR in that public relations is a strategic communications process that builds mutually beneficial relationships between organizations and their public, hence public relations. Where investor relations, as you can see here on the slide, you know, it's targeting your individual investors, your institutional investors, money managers, analysts, you know, and things of that nature. So they all kind of run under the marketing umbrella, but they are a little bit different. Next slide, Terry. Yep, next slide. Okay. I guess here in asking, again, when we said IR and PR are slightly different, it's kind of tricky when we tell people we do IR, PR, media relations, marketing. It sounds like it's just so many things, but they are kind of under one umbrella, just all different aspects of it. So here, for example, marketing, it's the management process through which goods and services move from concept to the investor. It includes the coordination of 4 elements of marketing, which is identification, selection, and development of a product, determination of a price, selection of a distribution channel to reach investor, and development and implementation of a promotional strategy. So basically, you have a product, whether it be a company, a fund, whatever the case may be, you have to realize who your audience is, what the message is that they want to hear, what it is that benefits them, and then what's the best way to go about it. So in a nutshell, we could break it down as IR is communicating with the investment community, such as your current shareholders, potential shareholders, analysts, and brokers. PR is communicating with the public as a whole, such as advertising, media relations, events, webinars, etc. And marketing is your plan on how you execute the above two. Your plan to ensure that whatever you're presenting to your investors and public are done so in a fashion that best suits your goals.
So tell us about then, with this distinction, tell us about media relations and the components therein.
Sure. Media relations really is creating brand awareness, your product publicity program, advocacy program, product value awareness program, and public announcement program. Basically, the media, it's kind of changed a little bit. Normally, you would have, reporters writing about a particular company, but creating brand awareness is really, your audience is going to be reading the paper, so they want to, or reading the paper, or reading the online, news flow. So you want to create the brand awareness and create your expertise in a particular area and really put you as a favorable go-to person for that particular investment or company. One second. Okay, so here we have 5 advantages that flow from consistent investor communications. I won't go into every little bit here, but we have, force accountability, encourage evaluation, leverage relationships, secure new investors, and build infrastructure. And basically, again, the constant flow of communication, you want to secure new investors or new customers. That's always your main goal. But if people don't know about you, they're not going to know where to look or where to go or even of you. So, creating a, and this is done again through investor outreach, media relations, webinars, conferences, things of that nature, even putting you as an expert speaker on a particular thing, just really having your name out there so people constantly hear who you are, they hear about you. If you're somebody that nobody really hears of or hears of once in a blue moon, you're not going to be their go-to person when they're looking for, a particular product, a particular, fund, or particular investment, or things of that nature. You want to, you could just see that through, Wendy's, McDonald's, whatever the case may be. There's constant commercials, there's constant advertising, there's little gimmicks of, to help promote them, and it's a constant flow of communicating. So, and again, the force accountability, basically it's letting, your investors or your customers or whatnot know that, here's a company who knows what they're doing everything they should, but they want to hear from you. Just, posting a, a quarterly newsletter or a quarterly report, it goes so far, but it doesn't go the whole way. So these are pretty much the flow of consistent investor relations.
So a question then, with IR and PR and media relations, bottom line, what should you do?
I guess here, like it says, you kind of make it simple. You inform and educate. You do what you say what you mean, and you engage. And what that we mean, you're not, you like here, advantage of public relations. You want to be credible. People want to know that you say what you mean what you say. Like we've gone to, shareholder meetings at one point where the portfolio manager might have, anticipated a certain type of strategic investment, and it didn't go as planned because the markets, they do what they do. But instead of hiding, he said, listen, I took a chance, we invested in that, it didn't go as planned, here's why, but here's what we're planning to do to correct it. We're now moving this, and the audience and the shareholders actually respected that. Everybody makes mistakes. It wasn't, he didn't let it go to everybody's, share price tanked, but he kind of caught it. He said, okay, here's what I was hoping would happen. It didn't work out that way. I nipped it in the bud, and now we're going to reapproach our investment strategy to do this. And people really respected that. So, really, being credible, letting people know that you're doing what you intend to, you have their best interests at heart, goes a long way. Your target markets, or target market. Media sources can place the information that's right up the consumer's alley and give them required information they need. And costs, and it's true that PR can be costly if you hire the wrong firm, considering the cost of other promotional advertising. It's on the cheap end of the scale. And it is true, you can, some people think that, they target market, they have their current investors and that's who they reach, and that's great. But what about your peers? Who's invested in your peers? Do you know who they are? Do you know where they're reading? Are they online? Are they reading certain papers? Are they watching certain channels? Or, where are they going to get their information? Do they attend certain, events? Do they listen to certain webinars? Are you reaching them? So while it all sounds really easy that you just reach out to your shareholders and whatnot, unless you're doing it the right way and know where to go and what to do, and that's a lot of work, you're only getting so far. So, that's another advantage of public relations is knowing your target market, knowing where to reach them. And while people do think that that's costly, not doing it, 29 years of service, we could tell you it costs you a lot more when the company or fund doesn't go where they anticipated, or an activist comes in to take over because you didn't do all that you could. Lead generation. The media placement that you receive from PR is long-lasting. You'll likely have an initial flood of leads, and then as time wears on, you'll notice that it's still the possibility of leads generating from just one good media mention. It is true. It's not just a one-shot deal. Like we're constantly pitching clients to the media to try to get leads, and like I said, years ago, the media were a little different, where you would have reporters writing about articles, writing about companies, but now it's 50-50. You have reporters writing about companies, but you also have sometimes your peers writing like incognito names, basically boosting themselves or being an expert speaker on something else. So you want to constantly keep creating a story on what you could be pitched for. So say you're a company that has an investment portfolio and maybe real estate is part of that portfolio. Maybe it's just a small part, but setting that as your lead story on, what's the real estate market doing, and is it doing good, and why you have them in your portfolio. Even just putting a little spin on something like that to constantly keep having your name, thrown out into the media, and then that's a whole different, set of publications that you would pitch that to. So that's where the lead generation comes in, a constant flow of various roads that you could take to try to get your name out there to a big variety of a customer base or a shareholder base.
Now, I just want to segue for a moment into content marketing benefits, because as you articulated in your slide here, there are 10 content marketing benefits. Tell us about them and why they're so important.
Sure. Well, basically we have, I think you have to switch slides, Terry. Okay, bear with me. Well, we basically have 10 content marketing benefits. Basically, in our eyes, it increases visibility of your brand or your company. You develop lasting relationships with your audience. You improve brand awareness and recognition. You create loyalty and trust with both your current customers and your prospects. It helps you build authority and credibility. It positions your business as an expert in your industry. You generate traffic to your site to improve lead generation. You open a channel of communication through social shares and comments. You help your customer move through the purchase decision more quickly, and you provide value with no strings attached. And basically, it's like I said, it's a lot of work, and it's not a one-shot deal. You don't just, put out your quarterly report and then call it a day. It's a constant flow of, reaching your audience, knowing where your audience is, reaching potential audience, knowing where they are and what they're interested in, what they're looking for, and, not just putting out information once, but constantly finding various ways of, spreading the news and changing not changing your story, but posing your story in a variety of different ways that will appeal to various different potential customers or potential investors. So that's kind of our content marketing benefits.
So let's segue for a moment then and talk about another major topic here, and that's social media. I want to get your thoughts on that.
The dreaded word. I'm sure compliance and such are having a heart attack hearing the word right now. You'll see by the following slides that the majority of the world is on social media right now, from your customers to shareholders, traders, brokers, media. And I know that many compliance departments all discourage people from partaking in social media, but when over 5 billion people in the universe are on social media, why would you not want to be on there? So here you'll see on this slide, we'll be out of compliance. It's a major reason the financial services, they'll block social media for regulated users. However, the field's contrary to the evolving regulatory landscape. Both the SEC and FINRA state that they see a value in social media as an educational tool for investors. This appreciation for social media was reinforced recently at the LIMRA-LOMA 2014 Social Media Conference for Financial Services at the Ask Regulator session. Owen Donnelly, Chief Counsel and Office of Investor Education Advocacy, SEC, and Thomas Summon, Senior Vice President of FINRA, discussed how their respective organizations seek to protect investors and generally view social media in a positive light. Next slide, Terry. Here you also see the use of social media by the financial services industry is rapidly accelerating. In growing numbers, registered investment advisors or RIAs or firms are using social media to communicate with existing and potential clients, promote services, educate investors, and recruit new employees. And pursuant to Advisors Act Rule 206-473, firms using social media should adopt and periodically review the effectiveness of policies and procedures regarding social media in the face of rapidly changing technology. Next slide, Terry. And basically here, just reiterating again, that even, the Securities and Exchange Commission, they say social media and the internet in general have become important tools for investors. Investors can use social media to research particular stocks, look up background information on a broker-dealer or investment advisor, find guidance on investing strategies, receive up-to-date news, and discuss markets with others. And next slide. And here just showing again, the population on using social media. I mean, out of over 7 billion, almost 6 billion are using the internet. 5 billion are using social media. And you could see here, almost 5 billion are using everything on their phone. Everybody's on iPads, phones, and, being in the industry for 29 years, we've done various perception studies and various research, and, we've realized that not everybody follows the same thing. So some people will be using their iPads, some people are using their iPhones, some people are using their other cell phones, some people are using trading rooms, and some people are reading, watching Kramer on their phone, or some people are, reading the daily news on their phone, whatever the case may be. So not everybody follows one thing all the time. They're really just, following every avenue. So you want to make sure that you're following, that you're pretty much doing everything that you can to cover or to be in front of every single person that you can.
Well, it seems here to me that there are a lot of conversations going on, and as we can see, social media is becoming a huge part of the world these days. In fact, even going to a movie lately, unless you pick your seats online before showing up, you'll get to the theater only to have everyone seated randomly apart from each other because everyone has already chosen their seats online, and I've experienced that more than once, and the same applies to going out to eat. There are mini computers on the tables or tablets for you to plug in your order, and the same is true for airports. even board meetings. No one has the hard copies of papers anymore. Everyone is on a tablet, whether it's an iPad or an Android device. So between laptops, iPads, various apps, the world is online these days, and if you're not online as well, you can get lost in the shuffle. When you have time, you can browse through these points to assess your current PR efforts. I would just let people know that. But Patty, if you can, tell us what the relationship now, with all of these things in play, what the relationship should be between PR or IR and an investment fund.
Well, I guess for all of them, you know, they all have to be implemented. You know, it's very tricky for someone to say, like, we do IR or we do PR, you know, but we just found through the years that not everybody does all of that. You know, IR, again, is communicating with your investors, and not just one sending out a press release or whatever. It's constantly giving them a flow of information, constantly communicating with them, constantly sending out, you know, updated information, or letting them know what's going on with their company, with their fund, with their investment, whatever. And the public is, you know, letting, you know, everybody, not just your investors, but potential investors, and you know, letting them know what's going on with the company. And, you know, marketing, again, you know, they all play a role, but they're not just a once-off deal. You know, they all have to be implemented to have the most successful program. And, you know, I guess that's pretty much, you know, how they all tie in together. Like here, this slide, you know, evaluating your plan. You know, these are good questions for a company to ask themselves. You know, does the plan reflect their understanding of the company's business situation? Has the program made good use of research and background sources? Does the plan include full analysis of recent editorial coverage? Does the do the PR people fully understand the product's strengths and weakness? Does the plan describe several, you know, relevant conclusions from the research? Are the program objectives specific and measurable? I mean, just a various program for a good PR plan. And, you know, like I said, it's not a once-off deal. These are things that constantly have to be, you know, talked about and you know, tweaked and changed. And you know, it would be easy if we just said it was just a matter of just sending out a report here and there and, you know, calling it a day. That would make my job so much easier, but it's not. It's really, you know, even with the news, I mean, reporters change every single day, publications change every single day, and now there's so many online publications. But, you know, it's kind of tricky for us because we'll have clients that'll say, you know, okay, well, I was picked up in this online publication, but so what? They only have, you know, 12 followers. But, you know, within those 12 followers, you know, you could, even the person who wrote it, he could have his own, you know, online newsletter. He could run a training room, and, you know, maybe some of his followers, like even me, I'm just one person, but when I tweet something, you'll see on one of the other slides, that tweet could get retweeted, you know, over 500 times. And maybe out of those people who have retweeted it, you know, they now have several hundred followers or several thousand followers. And, you know, that's not including all the various other methods that I send information through. So, you know, again, it's just one of many parts of a plan that have to be done.
Good point. And here's a sort of bottom line question. How do you quantify the value of PR or IR? How do you determine the ROI on something like this?
I guess by way of example, a cover story in a major magazine or a segment on a top financial TV show is, for all intents and purposes, free. But compare that with advertising for a similar space or commensurate time with the same venue. That advertising costs are tens, if not hundreds of thousands of dollars, where your messages have none of the same credibility. You can calculate that expense down to the last cent, but there's an incalculable value too, which accrues to businesses that transform themselves into brands. A brand resonates with the public in a powerful way, making a company's perceived value, indeed its actual value, all the more worthwhile. And even just from our, you know, standpoint, where, you know, we have companies that will say that they're doing a lot, and we can do so much for them, but we have to be allowed to do that. You know, we've represented companies in the past that, you know, for whatever reason, they don't want to do certain things. But when, you know, dealing with the investment community for as long as we have, we see what other companies are doing. and we know where all of your shareholders, analysts, brokers, and media are following, and there are so many different avenues of where they're located. If you're not doing all of this, you're not doing enough. And there's so much more that could be done and should be done. You know, so I guess doing that will put you above and beyond your peers, and that, I mean, to me, would be invaluable and help with your ROI for sure.
A good point, and I have another sort of bottom line question here, and that is, coming back to what you earlier said, why is PR or IR, in your opinion, a necessity?
I guess without it, to reiterate an earlier point, you cede ground to the competition. You forfeit potential investors to the competition, thus enabling the most focal fund or company, which may not necessarily be the best fund or company, to increase the amount of money it has under management. And that scenario is unacceptable. You know, we've again seen that companies that don't do this, you know, again, if nobody knows who you are or doesn't know information you've had, like even for example, we had companies that would put out an earnings release, and you know, we actually also have companies toll-free lines that ring on our desk, and we've had people who said, oh, I didn't even know that there was a dividend check until I opened up my bank account and saw the extra money in there. So the information's not necessarily getting where you think it is or where it should be. So if you're not constantly throwing yourself into everybody's face to let them know who you are, what you're doing, and why they should be a part of you, you're basically, you know, I think it's a necessity. You're basically falling off the radar.
So if it's a necessity, what are the risks of not having a PR or IR strategy?
Well, I guess based on here, I mean, if a crisis should happen, you know, be it a temporary setback with your fund or company or damage due to speculation, rumor, or innuendo, you have no program in place. You have no professionals at the ready to reverse this possible exit by investors or correct this information by the press. And even just here, like we've had companies in the past, for example, that, you know, we've spoken to activist investors just really to hear what it is that sets them off. You know, almost like let us know what we could do to educate, you know, your investments so that people don't fall into this trap again. And one of the things they said is we never hear from them. We only hear from them when we come knocking on their door. We never hear from them any other time. We don't know what's going on with the companies. Like, we have to go out of our way to read their annual reports, make sense of everything. We don't hear what they're doing, what's going on, what their plans are, you know, or why they changed, you know, their investment strategy, whatever the case may be. So not having this is really, you know, you're kind of setting the stage for, you know, having disgruntled investors, I guess, or disgruntled customers. But having it here and really just kind of, you know, throwing yourself out there, letting investors know who you are, what you're doing, what your plans are, what's going on, and it doesn't always have to be bad. I mean, you can do something, like I said, the company who changed, you know, had made an investment strategy that didn't work out, you know, in their favor. You know, being open and honest with your shareholders went a long way. They felt, okay, you know what, he explained it to us. He was on the ball. He was paying attention. He saw what was happening. You know, but we had another company who, you know, at one point was invested in the financials, heavily invested in the financials when the financials were tanking, and they never did anything about it. So, you know, if you're not, your shareholders are looking at you like you're asleep at the wheel. But instead of saying what your plans were or letting them know that you're paying attention, you know, they wound up, you know, the shareholders got disgruntled and they were in an activist campaign and whatnot. And, you know, so you really want to have an active IR and PR strategy to keep on top of these things or, you know, basically prevent any issues from becoming an issue, and really just keeping your shareholders and your customers informed of what's going on.
Finally, how should PR or IR help investors?
It should clarify essential information, crystallize intelligence into the intelligible content, and convert otherwise abstract data into accessible material. In so many words, it gives investors something they can use, something that better helps better understand the advantages and reasons to invest or to continue to invest in the fund or company. You really want to just put it in layman's terms of, you know, here's who I am, here's what we do, here's my thinking, here's what I've been doing this month, whatever, this quarter, let them know that you're involved, that we're hearing from you, you're on the ball, you're paying attention, you're doing everything you can, you're reading the markets, you're reading, whatever, that you're on the ball and you're doing what's in the best interest of your shareholders.
Very, very good point. And you've had a great deal of success in your IR/PR efforts for clients, and I know you have a number of slides to go through that, express that. So before we get to that, I want to thank you for your time, and I'm going to follow this online with regard to the remainder of this presentation. But again, if you can just set up for us the success that you've achieved and that Pristine Advisors offers for the clients you work with, it would be much appreciated.
Thank you. Yeah, I mean, we have a lot of information on our website, which is www.pristineadvisors.com. We have case studies, accolades for our work. And basically, just through the 29 years, we've accumulated over 350,000 people in our database of investors, analysts, brokers, media. And these aren't paid databases. These are connections that we've accumulated over the years of working in the financial markets. And it's tricky, but you can clearly see, even on the one page, I believe it might be 39 or 40 on here, where we post something, when we post something, hundreds of retweets, retweeted what we posted on Twitter alone. I mean, we have over 100,000 followers on Twitter, and that's not including several LinkedIn groups that we run, or even touching on our database connection. But many people say, so what? So 532 retweeted you. But from those 532, you're now getting exposure to their followers and so on. So it's a cycle. Even taking media relations for a moment, in the past it was easy where reporters wrote articles on publications, and like I said, now it's 50-50, where 50% are reporters and 50% are people or investors or your peers writing under incognito names with their expert opinions, etc. So, you say you had a not-so-nice article and then you had a good article written and circulated to the masses. If we were your IR/PR firm and our database of over 350,000, they would see that announcement, plus over 100,000 from our Twitter feed, plus our LinkedIn groups and Google+, etc. And depending on where you're posting, I mean, there's Twitter, Facebook, LinkedIn, Google+, LinkedIn+, Snapchat, Tumblr, Pinterest, YouTube. I mean, that goes on and on. And while we could use one, we know that everyone uses something different and for various reasons. So we cover them all to cover your bases and ensure that we reach everyone. For example, RIAs and brokers use email as well as monitor trading rooms and publications. Investors maybe use snail mail as well as online trading rooms and groups and media, as well as radio and television, such as Kramer. Everyone uses something different. And again, depending on the company or fund, it could be advertising, it could be mailing, it could be apps on your phone. It all varies, so why not cover all of your bases? We're in the middle of a perception study now for BDCs, and one of the questions was, where do you seek information? And ironically, 85% said press and social media as well as websites. But again, not saying that social media are the only way to go. We do a ton of IR, PR, media relations, and marketing. And it's not a 1-2-3 job. It takes a lot of work and a lot of time. We often work with firms that also have their own internal and IR, PR people because, one, we have the connections to help them succeed by being in front of the audience that they need and want. And two, it's a lot of work. So it's better for them to work on the daily fundamentals of the company and leave this to us to handle. For example, we've known companies who issue a press release here and there and post it on their website, but that's it. That's where the IR or PR folks tell them to do. But what else? In our 29 years in the industry, we can attest to the fact that brokers don't always share press releases and such, to their OBO investors or retail investors. And not everyone knows to go to your website to find updated information. So how do they know? What about potential investors? Do you know where to find them? And even if you do, sending them your one press release, do you think that's enough? It's so much more than just that. We market funds and firms constantly, feeding the investment community information, webcasts, blogs, newsletters, being placed positively in the financial press, or wherever your target audience is and what they read. Being an expert speaker in rooms and blogs so people can hear you and know that your expertise and speaking at conferences, and not just any old conference that claims to have thousands, but like ours. We pre-qualify attendees and make sure you're in front of a top quality audience with no breakout rooms so that everyone's there listening to you and constantly on the search for your target audience. Who are your peers? Who follows them? get them interested in you. What are they invested in? Who follows that? Get them interested in you. It's a lot of work, and trust me, we know it's not a simple once-off job. It's a constant, everyday, all-day process, and one that we've perfected over the years, and one we take, great pride in. We're always on the lookout on ways that we can enhance what we do. What else can we do to help market our clients? Is there anything else being done that we're not aware of? If so, everyone needs to be trained ASAP to ensure that we're doing everything and anything we can to assist our clients. We do whatever we can, but it's a two-way street. We need the clients to let us do what we do best and market them to the investment community. The press and the markets in general. We can make all the suggestions in the world and what we think they should do, but they have to know the value of doing such and how the rest of the world is already doing it and how they should do it as well. Hence this webinar. That's my 2 cents. Well, we might have lost Lewis, but anyway, I just really wanted to, highlight the importance of IR and PR and marketing and media relations and whatnot in the financial, the financial community. And, we remain at your disposal. We've been doing this for many years. We've had great success, from our clients. We have case studies, as I mentioned, on our website. And we can do the same for you. So if you have any interest, just email us at pristineadvisors@pristineadvisors.com, and we look forward to speaking to you. Take care.